What's good, everybody? Today is Monday, July 14, 2025. It's Luther Wilson III here as a real estate pro representing for Upside Property Services and Upside Capital here in the Kansas City market, as some of y'all know. Part of my mission here is to educate, inspire, and collaborate. And a big way that I'm able to do that is through real estate. And on these YouTube videos and what I talk a lot about or post a lot about on social media as it pertains to real estate, investing, business, sales, and so forth has to deal with capital, strategy, and operations, okay? And in today's session, I'm gonna go a little bit deeper into the capital aspect of the business, in particular for real estate investing, okay? It's definitely gonna be helpful for those who are investing or who are looking to invest. And it might just be helpful for the practitioners and service providers out there who are working for or with real estate investors, okay? So there are two big things that I want to go over today. One of them is called a capital stack, and the other is called a capital call, all right? So if you are familiar with real estate, maybe you have some experience selling it or investing in it, then you probably already have an idea of what those terms are, but you may not have necessarily called it as such, okay? Because I know that was the case for me. And as I started to get around some individuals who have a higher net worth and some players in the space who are doing commercial real estate, multifamily funding, syndication, and that sort of thing, I started to hear a different type of jargon and some different terms that got thrown out. And so I started to dig in a little bit deeper and ask around a little bit, do some research on my own. And I realized that I had, done some of the stuff and didn't really know any better, didn't really know what it was called, okay? So I'm gonna go over some of the situations or scenarios around a capital stack as well as a capital call, okay? I got some help from AI. I brought some notes with me, so we'll get into some of the definitions a little bit deeper. And then I'm gonna go even further and talk about how that looks in the Kansas City market for stuff that I've done in the past and things that me and my clients and customers are looking to do going forward, all right? So the capital stack, okay, basically is the funding and financing that is being used for your real estate investments, okay? And it is usually a combination of debt or some type of mortgage or financing as well as equity, okay? So, and it usually is a combination of the two, okay? So you got the mortgage and then you got the capital that gets brought in for, whatever reason. And it could come from you, it could come from a capital investor as a joint venture partner, or on some of the bigger projects that I've sold and some of the people I know here in the community have done, it sometimes is set up as a fund or a syndication, as I mentioned earlier, and that equity piece could come from outside investors, if that makes sense, okay? So then the capital call, okay? So when I thought of a capital call, I initially thought of it in the negative sense as something that happens that may not necessarily have been anticipated or it wasn't necessarily planned for, but it's not always the case. But in a lot of cases, a capital call is when you have to go and get more money. And I realized it's more than just for unforeseen things. It's for purchases, but for those things that aren't necessarily anticipated or they may be unforeseen, it's after the property has been acquired and there's more money that's needed to either to finish a renovation. It could be one or more maintenance issues, okay? Or it could be for a refinance, okay? So we're gonna get into that a little bit more too, all right? So you got the capital stack, which is the funding and the financing, right? And then the capital call, which is when additional money is needed, okay? To be able to fund a project, okay? To be able to complete a project, or perhaps even to sell or refinance out of a property or project, okay? So let's get into AI. I got some help from Grok. And I asked it, I said, what is a capital stack as it pertains to real estate investments? And it said, a capital stack in real estate investments refers to the structure of all the capital used to finance a property or project, arranged by priority of repayment and risk. It shows how different sources of funding, equity, debt, and sometimes hybrid instruments are layered to cover the total cost. Okay, so pretty straightforward there. And then, you know, if you're doing a bigger deal, then of course there's gonna be probably multiple layers. But for most of what I've done, again, here in the Kansas City market, has been a lot of single family home investments and some smaller multi-family properties that I've sold or managed or renovated or leased up or invested in, okay? Over the last 14 years, I've been at this thing doing it. And so for those single family homes, that's been, you know, 90+% of it, it's really not as intricate, okay? So I think a lot of people out there, most of my audience, they're gonna be looking at doing a house, okay? Early on, most investors, they're gonna look at buying the thing, rehabbing it, and then reselling it, okay? And even before that, you know, some investors are gonna be selling it or assigning it or, you know, maybe representing someone or something like that. But for those that are acquiring property, right, most of the folks that I've worked with, you know, they're looking at buying it, renovating it, and then reselling it. And then eventually, or at least that's their hope and their plan, they want to get to the point where they can start keeping some of these investments for multiple years or for the long run. And in that case, a lot of them are still going to be purchasing and renovating. And then from there, a lot of times they're going to refinance and then they're going to keep the property as a rental or some type of cash flow investment, okay? So the capital stack for those individuals or investors who are looking to do just that, it's gonna be either they have a capital investor who's supplying the capital, or maybe the investor themselves has it and they're going in straight cash, which is fantastic. But what I've seen and experienced, I've done it myself too, there's gonna be layers there, okay? So on the front end, there's gonna be some type of short-term debt usually. A lot of investors using hard money loans or some type of, you know, short-term mortgage that needs to be paid back in full within 6 to 12 months. And that's usually in first lien position, okay? And then what gets interesting is that a lot of us think that we'll be able to use just that first lien position debt to finish the project and then get through the refi, which I think prior to 2022, 2023, it was a lot easier to do that, okay? Now it's different because of, you know, circumstances, things that are out of our control, the risk factors, okay? So that's another thing that I've been talking a lot more about lately is risk. how can we limit our exposure and mitigate or minimize risk as we are, using our money, our time and energy, and other people's money especially, to be able to make this thing more efficient and hopefully more profitable and long lasting. Well, the capital stack and the capital call is critical. So that's why I'm talking about this stuff. So a lot of investors want to fix and flip, right? Or they want to use the burst strategy, as I mentioned. And so they're going to be using, in a lot of cases, some type of short-term debt. And like I mentioned before, our assumption is that that will get us the full way. Well, a lot of times, no, it doesn't get us all the way there. Okay, so that means that, okay, even if we're able to acquire the property with the use of the hard money loan or the short-term debt, we still need to get at least part of the way through the renovation, okay, before the lender issues us a draw to pay the contractors. So that means that you're either going to need to find a contractor or a crew to front the costs of the labor and material, or you're going to have to do a capital call, meaning that you yourself, if you have those ends or those means, which most of us don't, okay, or you're going to have to do a call to your rich uncle or your business partner, or you may have to do some dialing for dollars. However you got to do it, go into your local meetup. If you got a list of private money lenders somehow, and it can be quite stressful. Okay, so part of my mission, like I want to help make the thing more efficient. Okay, so that you can get through the process. And so for most investors, again, you're probably not going to do this the first few times. I didn't do it. I didn't know any better, right? But now that I've done it quite a few times and I've helped several investors through the process, I'm now looking at, hey, how can we get the capital stack straightened out first, making sure that we have, the funding, the financing lined up, and plenty of capital or equity to be able to get through the project and get through the resale or the refi type of thing, so that we're not sweating and we're not under the gun and we're not putting our hard-earned capital at risk, okay? Because I've seen so many investors, and I think in third quarter 2025, this is probably going to be timely as we're dealing with a lot of political, social, economic issues going on, not just in the United States, but globally, okay? So tap in, do your own research, dig in, ask around, your mentors, your advisors, whoever's been in the game for a while and who like, and trust, and who is spitting truth, and figure out, like, okay, if you're serious about making this thing happen, then let's get serious about making this thing run like an actual business so that you don't get stuck. And that, you know what I'm saying? So the capital stack, the capital call, a lot of investors doing fix and flip or the burst strategy, okay? So I'm encouraging you to dig in and learn this stuff and figure out, like, okay, I understand, or you may understand that you may not be able to have the full capital stack set up beforehand because you're not really gonna know, okay? So you can look at it as most investors do, let's go find the product first or go find the opportunity first. Well, if you want to really, really do yourself a favor, let's figure out, like, at least get part of the capital stack figured out first, so that for sure, without a doubt, no ifs, ands, or buts about it, that when you find this opportunity, that you and whoever is involved can perform and succeed and get it done and execute, okay? And having the ability to raise capital and having a better understanding of the funding and financing that's out there available for investors is going to help you tremendously. Because I promise you, I've been through it. I've gotten stuck multiple times, and I can promise you, this stuff does not get talked about. All these investors who are doing multiple deals, They have investors, capital, multiple investors lined up, at least two of them or three of them. And if you do not have an agreement with them, you may want to look into having some type of agreement with them or some type of entity that you own, right? Maybe your capital investor owns it with you. If so, great. That's cool too. And then when it comes time, you know that, okay, we got the credit and the ability to borrow. We know who our broker is going to be. We know what the model is or the strategy is, which is a whole other conversation that I talk about in some past videos that y'all can check out, okay? But I think another reason why investors struggle with this is because, you know, with fix and flip and with buy, renovate, refinance, it's really hard to model because each transaction, each deal is so different than the previous one that it's just tough. So that's why most of us go fumble around. And then eventually, if we can last through the shifts in the economy and the markets and so forth, then eventually top players, you know, I have very little regard or care for what the majority are doing. And if you want to succeed in life and in business and be great at whatever you're looking to do, sure, you could consider it, but you need to look beyond at what, you know, the top dogs are doing and how to make the thing more efficient, okay? So I think I hammered that. Let's get into what Grok said about the capital call, because I covered the capital stack a little bit. Let's see. And one more thing on the capital stack that Grok said. Understanding the capital stack helps investors gauge their exposure and prioritize their investment decisions in real estate projects. Bingo. Exposure risk, as I mentioned before. Okay, so let's get into the capital call and what that is about. Okay, so let's see here. Give me just a moment. Okay, so I asked Grok AI, what is a capital call as it pertains to real estate investments? Okay, and it says the capital call in real estate investments refers to a request by a fund manager, general partner, aka GP, or sponsor of a real estate investment vehicle. Okay, as I mentioned before, there's a different type of jargon, and a lot of the residential real estate investors, we're doing this stuff. You know, you're a sponsor. If you have partners and they're funding your thing, you basically have your own fund. You're a GP. You're the operator. Okay, so again, dig in and learn this stuff, baby. So, okay, or sponsor of a real estate investment vehicle, and examples of the investment vehicle is one of them is a private equity fund, one of them is a syndicate, and then another is a partnership. I mentioned before, joint venture partnership, I think is a great way to go for a lot of investors, and it does not require as much paperwork. You do not need to be SEC filed, and you do not have to have a whole on syndication spending tens or hundreds of thousands of dollars to be able to get the thing up and rolling. You can simplify it and do a joint venture partnership, okay, with you and one other person ideally who's got money, so you can go and execute, baby. So, all right, those are the examples. Typically limited partners or LPs to provide additional capital as outlined in the investment agreement, which, okay, most of us miss that boat. When we're getting going, we don't ever necessarily have an agreement. So one other thing that I mentioned before is a key part of this is having the agreement or the entity beforehand with an individual or a couple or perhaps a group that has a substantial amount of capital, okay? So a lot of us, we're already screwed. We missed it. So we got to figure it out. We got to keep going. Bump your head, fall down, get up, let's go. Okay, capital call. Okay, it is a mechanism used to draw down committed funds to cover expenses, acquisitions, or other project needs that arise during the investment period, which happens on virtually every single deal and every single transaction. Okay, so there's that. That's the first part of the capital call definition as it pertains to real estate, according to Grok AI. All right. Okay, so, all right. And then it goes on to say, a capital call is a tool to access committed funds from investors to meet specific project needs in real estate investments, typically affecting the equity portion of the capital stack. Okay, for experienced investors, structuring the capital stack first, incorporating capital call provisions allows flexibility to fund deals or address unforeseen costs without needing to secure new investors mid-project. Okay, again, I've been there, in it right now. Okay, however, clear communication, legal clarity, and a strong deal pipeline are essential to maintain investor confidence and ensure successful execution. Okay, cool. All right, that makes sense, right? So you got to determine what came first, the chicken or the egg. How do you want to operate? I know for sure I was chasing deals for damn near a decade before I looked at the capital stack. Once I found the capital stack, I was able to buy and hold. Easy, no problem. Cool, all right. So, and another key part that I want y'all to really consider is when you have the capital and you have the funding lined up, okay, and I get it, most of y'all aren't gonna do this. You gotta get reps in. Once you get a few reps in, or maybe one rep in, take a deep breath and figure out, okay, cool, how did that feel? Do I wanna go through that experience 40 more times or 100 more times over the next 2 to 5 or 10 years? Or do I wanna figure out how I can make this thing more efficient? Knowing that, okay, cool, like we spent money to find the deal, we spent time and energy, money to find the deal, then we had to give it up or assign it, or we lost it because we didn't have the capital stack straight. If you got the capital stack straight, you're not gonna be missing out, baby. So that's huge, right? So now for Kansas City, in and around Kansas City, our model, now that we actually have one and we've gotten several deals under our belt, okay, I personally have helped over 100 investors in one way or another over the last decade plus, and I've worked with numerous capital investors and joint venture partners and so forth, as I've mentioned before, okay? So our model is single family home investments that we buy and hold, okay? We use seller financing as an exit strategy to free ourselves up, to get higher returns, to get more cash flow, and so that we're not working for 10 or 20 or 40 or 100 tenants. Because as landlords, whether you hire out or not to a third-party property manager or you do it in-house, when you own rentals, you're essentially working for tenants. Okay, think about that life. Is that how you want to live? Okay, now think about seller financing. Okay, so numbers. Okay, so when I talk to a capital investor, I'm not quoting them double-digit returns right off the bat. Okay, I'm gonna get my capital investor. In fact, it's not even really what my capital investor gets on as their end, net money, the actual investment. So in our case, the property, the single family home that we purchased and then did seller financing on the short term or the short run, if we're doing this in a safe and secure manner, right? We're gonna be looking at buying a house. If we can get it on terms or use existing financing, great. But we're gonna be looking at buying a house and using some type of leverage, putting 20, 30% down, and we're gonna get to it, all right? And that is what I use as a baseline, 6 to 8% cash on cash when done well, okay? Over the long run, okay, if you can hang on, which again, most of you won't. I'm planning on it, but most people won't because it's hard. And you think landlording is it, and you think fixing and flipping is it, and you think the burst strategy is it until the market turns, okay? But if you can hang on and you adjust and pivot and you do what actually works and not what a majority of human beings or majority of investors are doing, then you will succeed and you will see results. So 6 to 8% is what I tell my capital investors, right? Knowing that I can get more, knowing that I have a track record and have done multiples where we got way more, but I'm not gonna spoil my capital investors because I'm doing all the work, okay? So for the GPs out there, for the operators out there, you know, you gotta choose, like, which do you value more? Which do you think is more important? The capital or the investment model and the people that are running it? You gotta choose, you get to decide, okay? So on some of our investments, we've gotten 30, 40, in some cases 60 to over 100%. But I'm not gonna come in quoting that because I'm gonna get a bunch of hungry wolves and some sharks and nah, you already know. So on the single family homes in and around Kansas City, C class, B class is great. That's where we've seen the most success, the most stability, okay, the most long-term success. It cash flows $300 to $500 a month, okay? That's net, all right? So you individually, if it's just you, cool. If you're bringing in a capital investor, great. You and your capital investor are gonna split that somehow, all right? There's cost, there's fees along the way, and you gotta determine how you want to model, okay? How you want to operate and how you want to run your business. My fee's $10,000 per house. And it's really not even me getting paid that. It's more like an advance because on almost every deal, stuff comes up and I end up having to dig into my own account to help fix it, okay? Besides the acquisition costs, the down payment, if there's any maintenance, if there's closing costs, of course, if there's any upgrades and repairs, renovations that need to be done, then there's your fee, right? If you're brokering the deal or you got it set up a certain way. And then again, to help mitigate risk and limit exposure, which is what it's all about, right? You gotta have some kind of reserve. My reserve per house now, and I say now because I didn't charge 10 grand advance or fee for years, and I didn't do 5 grand per house reserve, and now I see why, that it's important, okay, and why it needs to happen, okay? And if you aren't able to, you gotta find investors who are willing to rock with you, or you can politely tell them to kick rocks with bare feet, and good luck to them, because odds are they will lose money, and they can go mess around and find out, and by that time, they're gonna be out of the business, and you may not probably be in touch with them. So it's a numbers game. You gotta talk to people. You gotta find individuals with money who are gonna respect you and respect the business and go long term, because that's what investing is. I don't even know why we say long-term investing. Investing is supposed to be long-term, right? Anyway, that's a whole other story. So you got the acquisition fees, you got the placement fee, you got the reserves. Our model is seller financing, okay? I have not seen or found or done a better thing in real estate besides being a lender of sorts, which essentially you are when you do seller financing. So there's the sauce, there's the blueprint, there's some more free game for you, okay? So check out the past videos, reach out to me if you want, talk to some people in your community or in your market, get some advice from an attorney, a CPA, tax advisor, if you so choose, if you're not so sure about the legitimacy or the legality or the amazingness of this type of model, okay, and give it a shot, okay? And again, like, you can quote your investors whatever you want, but when you don't hit that mark, right, they're gonna be looking at you, right? I want investors who will rock with me on a conservative, steady, long-term cash flow investment. And I know that they got the ends and means to be able to support our business and our operation. So when I do come across a sweetheart type of deal or a slam dunk, home run, out of the park, walk off, World Series type of home run, who do you think I'm gonna go to? All right, so think about that. Okay, so I appreciate you tuning in to this session, taking a deeper dive into capital, which is huge. Okay, some may argue otherwise, but it's the number one thing for real estate. In fact, it's not even about the real estate. Kudos to my mentors out there. You know who you are, been putting me on game. It's really about the capital. The real estate just happens to be the product or the vehicle or the source that we can utilize to serve our capital investors and to serve our residents and to serve our communities. All right. So again, thank you for tuning in. That's it. Stay blessed, y'all. Peace.